Okay. This is iCantw84it. It is May 4th, 2021. The market just opened, and I'm gonna go ahead and start off with. There's some news out there saying that it's resurfacing that Apple has a car coming out, electric vehicle.
Welcome to the age of
And so
power.
this is one
The
of the
new
photos of the
must-watch
inside
HBO
of what it's
original
supposed to
series
look
The
like.
Nevers is streaming on
I'm sure
HBO
there's
Max.
better
In this
better
genre-bending
photos.
drama, Victorian London finds
But
itself
yeah,
amongst the
yesterday
touched
I guess
people
there's
who have
more
suddenly
surfacing
gained
of this
abnormal
the news
abilities,
that
some charming,
Apple
some
has a
very
car coming out,
disturbing. Among the true
and I
and
guess
Penn emerge as
here's
champions of the
I don't know if I
touched,
can watch
fighting
this
enemies
video on
from all
YouTube, but we're
directions.
gonna go ahead and play
The
it.
Nevers, now streaming on HBO Max.
This is the Volvo S60 plug-in hybrid, E8 twin engine. It gives you the power to pull away from the hustle.
It looks sick. I don't know how much of it's gonna actually come in. It's a little out there. I'm not gonna That's that. Not too exciting, but whatever. So let's jump into the action. Looks like there's a lot of action going on. Good lord, what happened to RRR? RRR spiked up to 38 bucks and came back down immediately. Now it's sucking back up. Or trying to suck back up. Looks like they're trying to go for accumulation. I don't know what this is. This is crazy. I've never seen anything like that. I mean, not on this stock. What is going on? That is one massive red candlestick. I don't know what's going on with RRR. Let's see. This scary and daunting all at the same time. So it gapped up to 38, and now it's gapping down and then bleeding to this last previous node down here. So if I was to draw a money line from the top of this wick right there to the bottom of this one right there, it's basically where your node is. And so it looks like it's going to tap that to get some cheaper shares. And then once it does that, oops, here. Looks like it's going to make a run for there, there, there. So change these colors to green. I don't like those standard green, so sorry. A couple extra steps. So we're looking in between these two here, in between these two here. I'm gonna leave that one red, and then I'll put this one as green. And then somewhere in this area. Look how far, look at it hit here, and look how far back it's wicked back. It's already back to where it ended yesterday. It's a 15-minute candle, so we got a good 10 minutes left on this candle. But wow, what a fucking candle. 38 bucks. That's crazy. I mean, it was there already, so it makes sense that over the, you know, as they drug it down for them to bring it back up. But hey, one candle, woo! Okay, let's go. My my Robinhood count shrank back down to about 533 after hitting a high of like 830, I think, or 730. It was sitting around 675, and then it went down to 575 last night. And this morning, now it's up at 643. See if I can grab this, bring it over. There's 637, 643. It's bouncing. We got good ones to look at here. We got CWK making a move, ENBL making a move. RRR trying to come back from its massive red candle. UAMY not really making a change. XPOA, woo, up 700%. What? All right, we got some things to look at. Let's go. Let's take a look at this. XPOA up 700%. I don't know what it's talking about because it's sitting like it's low. Maybe I'm missing something. But there was a big massive green candle here, and then it dropped. It's green. Where did it gap down to? I see it on my screen. Okay. Well, either way, drawn. I don't know why it's saying. Probably because it went from 1 cent to 8 cents. Okay. Getting some dark green volume here, which means it's above average here. So we're actually starting to see some action going on here. Bring my portfolio back to the main page. UAMY not really making a move. RRR still trying to come back. NXTD, let's take a look at that. Let's get the sour out of the way. Gap down, looking pretty strong and trying to fill that back up. It went up, came back down, but still coming up. So probably all of these are gapping down in order to make a move to go back up. Gap down, get some cheaper shares, load up, take out all the stop losses right here in this area, in this liquidity area. Load up on all the fresh contracts that have been freed up, and then try to control more of the float so they can ride it back up. And so now, if this fails, then it's just going to tank and go even further. So that's, it's the catch-22 there. But it looks like, I mean, this one looks like they're trying to fight to take control. It did go red there again for the second time, but it looks like it's trying to go up. So they might be getting control of that. That's NXTD, so we should be probably seeing this one take a ride up here shortly. Mine up some sub pennies, filling up this the whole channel here, which is pretty strong, very bullish. Basically bullish engulfing. It's eaten every candle going back as far as, you know, like about 10 days ago. So that's pretty strong, or 15 minutes, so a couple hours ago. And if that can turn around, go up, and stay up, then that'd be good. If not, probably gonna drop down again. CWK. Alright, gap down, running up, looking strong. 75 cents on my option call, which is for May 21st. Strike price of $17.50, which we're already there. This thing goes up past $18.50. I mean, we're looking at some serious money there. I got 4 option calls. Not some serious money, but I mean, probably double my account, which is not saying much either. But the whole point was to start off really small. I started off with 500, you know, and I've invested it. And I've gotten it up to about 800, and then took it out, reinvested it, and now, of course, you're going to see some drawbacks as things start to, you know, settle and get into their movement. And so now it's back up to 630. It's glimpsed 700 to 800 twice. But I think it's just now getting to the point where it's ready to go. RRR is actually retesting that line that I drew for the. So CWK looks pretty strong here. If we can keep going up, that'd be great. I don't have predictions drawn on this one, so I'll pull up the predictions next. I just kind of want to glimpse over everything as it sits on the Thinkorswim account, so you can see the volume chart and we can look at the indicators here. This gap up here for ENBL, I mean, it was due anyway, because it was like sinking down here and like just drowning for no reason, because it has plenty of moves to run up and has to double in price. So this gap up is not unexpected. I was kind of expecting this, and so this should take a run and go for it. ET is going to follow with it, so there should be a gap here as well. And there it is right there, looking pretty strong. ENBL is going to follow ET on the way up, and you know, because ET is buying ENBL. So that is the quick recap for the day. Now let's switch over to my trading view, which we'll just leave it where it's at. I'll just switch displays here. There you go. Alright, so we're going to start off with RRR. If I zoom out here and go into a day chart, this will start to look a little bit more like it should. My coffee's cold. Yay. Alright, I'm gonna shrink this down. Alright, so we've got a consolidation box here. And just like Facebook, this is doing basically the same thing Facebook did. So, it dropped down off the top Bollinger Band, came down here, came back up, retested the middle, the mean, came back down, hit the bottom Bollinger Band as a spring. This is basically the dip in the liquidity, and then bounces out. Once you hit a new high, you have to come back and retest that the high, or you have to make what was resistance now support. And so that's what this is doing right here. Is if you look at this, the top of this box, it's basically coming down and retesting this area to find support. And there's a big gap there, so I mean, it does need to kind of solidify that gap. And usually what that means is it just puts a wick into it, or comes back close to it, you know. So I mean, I probably anticipate it, if it actually goes lower, it's probably going to come down to 36 even. There it goes right there. And hit that area, or as low as 35.30, and then turn around and rocket ship back up. Plenty of support here. I'm not worried about it going any lower than that. This is a very healthy stock. It's a very aggressive stock. I'm not concerned with it. If it wants to take a turn to come down, then let it, because it rarely ever does. It is right here at 35.10 and still kind of moving up in an angle too. So I would think that it probably comes down to as low as 35.10 at its lowest, and then bounces up and goes back up. Which would make for a very bullish run, because it's going to accumulate a lot of contracts and shares and free up a lot of shares here, because a lot of people are going to have weak hands and let go of all those shares, and that's what they want. They want to shake out all those people who have weak hands and gobble up all those contracts so they can run this up for a new high. Contract ends at May 21st, so they're going to want to do this before May 21st. So I foresee this happening probably going to see a run up before the end of the day for RRR. RR is one of my thoroughbreds there with divergence. I have a lot of respect for that stock and Home Depot. I kind of see them as the same, but RR is just a much more valued priced version of that. So now let's get into CWK. CWK opened up with a drop. It gapped down, it ran up, filled up the channel, went up to the last previous high, then now it's dropped back down again. I don't know exactly what they are up to, but let's see. It says they're down 12 cents for the day. Looking at the other chart here on Thinkorswim because it's a little bit more up to speed, and it's just a big massive red doji
Welcome.
that's bleeding down almost to the bottom Bollinger Band. Right where that blue line is where the actual price action is stopped on the previous previous candle. So now this it seems to be like another red candle forming with low volume, right where this one is, and so we're just waiting for it to kind of solidify on what it wants to do. Looks like it's hit accumulation, so there might be need of 3 bounces before it can go up. And if it hit accumulation back here, then this would be 1 bounce, 2 bounce, this is the 3rd bounce, and this should be the free ride up. And so on the 3rd bounce, you know, that final dip in liquidity, it's called a hopefully they've gathered up enough there to ride it free going up. As long as the volume stays low and doesn't spike, this should actually just start moving up on its own. So that's CWK, looking for some movement out of that, and it's up to 0.93. Woo, get it. So now let's take a look at XTD, which is right there.
Come discover floor and decor where we
This is
know
the daily
grow.
chart. So I'm expecting an XTD to come down to this area right here, which is the 61.61 area. You know, it's already starting to dip down like this anyways, so might as well finish this out. It gapped down and it's down to 83 cents right now, and it might not make it all the way down to this area. This is just a kind of like a guideline for an absolute low. So, you know, if you look at it here, it's right here. It's at 83 cents, and it's probably going to need to go to about somewhere in between that and 60. And so once it finds its low, it's basically just retesting this node right here, and you know, it's basically, this is where it picks up supply, and up here is where it drops off supply or demand. And so it picks up supply, drops off, but this is just the intermediate one here. The actual real one is up here, and the next one is way up there and up there, and so, and then finally it's right here. So they've got shares that they've shorted from up here that they have to take back up here to drop off in order to break even, you know. And so either that or they're going to lose money on those shares. So the price action has to come back here before, you know, whenever their contract's in. I don't know when their contract's in, but I imagine it's probably going to on a major date, which is going to be probably May 21st. So you're going to see this movement where it's going to go up and try to retest this area so it can drop off these shares. And that'd be where I suggest getting out of this contract again. Alright, so we'll leave that there. And let's go to XPOA. My nose gets stopped up. Every time I go close to this and see, we'll keep tabs on it. It's up 4 cents right now, so not a bad deal. Mine started off running pretty up pretty hard, and now cutting. So whenever you have a really big green candle, let me see, let me get this. Come on. That's not what I clicked. The hell? Okay. Is it not going to show the candle? That's a daily chart. What am I looking over here? 15 minutes. Oh, these charts don't look the same. It does say that these are okay. I guess well, it still don't look the same, but whatever. Because this is trading view, it doesn't have an actual live feed. I do have Thinkorswim over here that does have a live feed, but I think here started off with a little bit of a gap down, and then it touched the bottom Bollinger Band again, basically double tapping this area right here, and then sprung up and hit the top Bollinger Band up here. And now it's coming back down again. It looks like it's trying to accumulate, and once it does, then it's going to make a run back up. Doesn't look very bullish right now. Oh, there goes, it just filled back up. That right there is a sign of accumulation. When you have a big red candle and all of a sudden it turns green all the way up, that is somebody buying up the float. And so the more times that happens, the more the float gets soaked up. And if the float gets soaked up, that means that whatever's left in the float, which is the amount of shares that are available for retail, that's me and you, then retail will fight over those shares and the price will actually start going up pretty easily, and you'll see this thing starting to rise. And so that's what's trying to happen right here, is every time this thing turns red all the way down like this, someone will come in and buy it up and soak up the float. And so we're just looking for that to happen over and over again, boom, 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 until it goes up. And so that is promising. And you can look down here on the volume. Look at this volume down in this chart down here. This little green line that's starting to form right here, that's showing you that there's a lot of green volume. There's a lot of buying right here, and it's starting to grow above average. So the average, it's right at about average right now. And so if this thing keeps turning red and then getting turned back to green, you're going to see this grow and grow and grow, and then you're going to have days like this. And so what happens right after this is you see the stock go up. You know, right after this guy here, it dropped because it sold more than it actually bought. So this here, they bought for the next 5 candles over. 1, 2, 3, 4, 5. And then sold off, buy it up, sold off, buy it up. So we'll see who wins that fight. Hopefully they keep buying it up and then it'll go up as well. So switch over to ENBL and ET. So this is the daily chart. I'm gonna grab my arrow here. This is where we entered down here over at 640, and this is the ride up right here. This has been pretty solid. It's on its way to doubling its price. It's worth $7 billion. The net value before ET bought it was set to be around $3 billion, which was half of what it was really worth. And there was a lot of rumors going around that they were worth double what they had said that they were. And then ET came out and surprised everyone and said they're buying, and there's a merger. It'll solidify in July. And so now whether or not ET buys the NBL, it doesn't matter. What does matter is that it's been proven that they're worth $7 billion, and so this stock is going to double in price no matter what. So it's a safe bet that this is going to go into the $12 to $13 range in the next 2 months. I've got calls that end at May 21st. I'm probably going to buy back into them again if this doesn't hit $12 and cash out of them before then. But yeah, I should definitely see this moving up. Should be a pretty easy run up. And then let's see. Starting off the day right here in the middle. It's already found support on top of this box and it's starting to move back up. And so as you see, like right here, the way this chart's set up, this day could break out and go up, or it could just kind of stagnate where it's at right here and then move over and then go up some more and move over and go up some more. Slow and steady. Or it could just keep going like this bull run right here and just go ahead and pop and go ahead and make it up there. Really just depends on the market, on how fast the news spreads and how fast they want it to get to the $12 to $13 mark. So let's take a look at ET. Alright, ET. So ET's kind of in this area where it can come down and kind of find support on top of this box that it just broke out of right here. But it's kind of already did that right here. And so it really doesn't need to. It's ready to go up, just like it's in the same position as what ENBL is, but it's just on the opposite side of this path. And so whereas this path is not as bullish as the other one, well, it's wide open like it is over here, but it's right in the bottom half over here. And so maybe that's just because I didn't put this in the right area. If I move this over, it would look just like the ENBL one. And this would be right up against that, and then this would be backed off a little bit. But either way, it's still following this path, so I think it's already come down far enough. I think it's ready to go up and create a new high. I think the next place it's going to stop is about the 950 area. You'll see it pop past it and then come down and find support on top of it and come and bounce up and go up. And it might make a couple stops before there, but I think that that's where your next major stop is right here, that 950 area. And it's starting to look, it looks pretty good for the day. It's already creating a candle on top of the other candle that it started off with, so that's pretty promising. Looking to see some good stuff out of this one for the day. Should actually start seeing some movement in the option price. Right now, ENBL is at 23 cents. I have no idea what ET is. It doesn't tell you on Thinkorswim without having to go into it deeply. So it's that I'm up $30 for the day on that one, and 15 on NXTD, which it always says 15. I don't know why. But let's look at trade. So yeah, it's saying that the delta is 37 cents. So I make $37 for every dollar that it moves up right now. The bid is at 15 on ET, and so if it goes up from there, that'd be great. So basically it's worth $15 per share. I've got 10 of them, so it's worth about 150 bucks. But if it goes up $1, then it'll be worth another 37 bucks on top of that, which means that it'd be worth $370. Not on top of it, I'm sorry. Well, maybe it actually might be 370 on top of that. But either way, it's 370 bucks either added to or in full. So that would be close to 500 bucks basically for if you added them both together. If it went up $1 from where it's at right now. So that's what we're waiting on that. Oh, I gotta answer this call. Hey babe, I'm streaming. Sure will. Love you. Love you. How you? Okay. I'm streaming, so I love you. Okay, that's my daughter, sorry. Ooh, CWK just popped up to $1.20. Down 20 cents. Not get it. First, not get it. Do you need me to mute, Tegan? Well, I can't, so too bad. So, ET up to 15 cents. We need to be above $1, so we'll see how that goes with it. ENBL is sitting at 23 cents. We need it to go up above $1. We need a lot of movement out of those. It's past due anyways, about a week. And let's take a look at CWK. I'm not really sure what's going on with it. CWK is showing down, but yet the value of the option price is going up. It's crazy. People are buying it up. I think there's a lot of, because it came down, people are buying it up, which makes the value of it go up faster. Because they're showing that it's at a discount basically, and so then there's a lot of implied volatility there because people want to get in at a cheaper price. So there must have been a lot of orders sitting here that's driving it up. Interesting. And I'm on the wrong chart, I'm sorry. So here. So they're driving the price down into this area here, and there's being a lot of orders, and this is called liquidity sitting here. And so because of a lot of orders that are sitting here, there's a lot of demand, and if there's a lot of demand, that drives the price up, and so that's what's spiking my option price up to $1.20 is the implied volatility that's down here. Now, it's kind of like a shaky thing. The more that it goes down, the less demand there's going to be because people are going to get scared and think it's going to fall. And so it could be like a double-edged sword here. It can drive the price up, it could also drive it down at the same note. So we're just waiting for this to come down, finish going into this liquidity area, and then find its bottom and turn around and go back up. So the good thing is that it hasn't touched the top Bollinger Band. It looks like it's going into a big squeeze on the 15-minute chart. So it's coming down to this bottom Bollinger Band, which is actually really good. If it hits the bottom Bollinger Band, then turns around and runs back up, that's a very bullish run. It means it's reaccumulating, and it's using that as a spring to launch off of. So probably looking for prices to come down into that 1749 area, and then launch up and go from there.
Visit Indeed.com/credit and get $75 towards your first sponsored job.
All right, my account is looking rather nice right now. It's at 771.21, so you can see how much it jumps. It went from 575 now to 771, back up to the high of yesterday pretty much in an instant. And so there it is right there, 575, 771, applied volatility, CWK at 120. Whoops, wrong side. Oop, there it is. So it's 575, 780 now. RRR just went up 5 cents, that's why. But implied volatility for CWK dropping is what caused it to run up. And then RRR, let's see what's going on with it. Running pretty deep here into the bottom, outside the bottom Bollinger Band to reaccumulate. So it must be hitting that same thing, going for that implied volatility, that liquidity run, hitting an area where there's a lot of people a lot of demand to buy this stock. So let's see. Switch this with the bring this back over here. So now where's RR? Here you go. So here's RRR. This is that box, top of the box I was telling you about, 35.69. Here's this absolute low one, which is the 34.46. It's dipping into this area, filling in this gap like I said it would. It would probably either come halfway, which is where it's at right now, or it'll go all the way, which could be like the 35.29, or it could come down to like that 34.50 where the actual center of the node is. But realistically, probably worst case scenario, 35.30, 35.29 area, or just stopping where it's at right now because it's at the top of the node. But there's a lot of implied volatility there as well. That can make the stock or the option price actually run up as well because there's a lot of demand for it right there. And so it coming down to that area spurs a lot of buying, which could cause the actual option price to run up as it comes down, which is weird, but that's how it works. And so just waiting for that to solidify to see if they can accumulate enough to start running up on its own. Starting to see a big green candle here form. Not a big green, but like a dark green, which means a lot of volume. Looks like it's about to hit accumulation again, which is a good thing. And so if it hits accumulation again, then it's going to be ready to run up on its own. So now we got CWK taking a dip, RRR taking a dip, ENBL and ET still sitting up there, 14 cent, 9 cent, nothing ridiculous. Just kind of hanging out, waiting for them to make a move. Looks like ENBL came down a little bit to retest the support line after breaking out of the high. Looks like ET did the exact same thing and sucked back up. Again, once you break a high, it comes back down, tests that, finds support on top of what used to be resistance, and then bounces up and goes out from there. So that's a pretty normal move right there for both of those. Those should start going back up again. So just we'll watch those pretty closely. Let's see what's going on elsewhere in the world. Is Apple on this list? Apple's down $3.88. So rumors of the car didn't really help out for that. Tesla still looking dirt, $16 down. That's pretty sad when you got ENBL sitting at the top of this list. I got my favorites list. Let's switch back to my other camera here. This is my favorites list over here. And I got Home Depot sitting at the top, which is sad because Home Depot is the thoroughbred for divergence and everything, but it moves like $3 to $4 a day max usually. Yesterday it was about $8 and it was sitting at the top of the list, which is sad because it's usually not at the top of the list. Well, I mean, it's usually about within the top 5 because it's a standard like $5 run every day usually. And then everything else is usually whatever is above it is usually double digits. Tesla, Facebook, apps, what is it? Amazon, Lululemon, these stocks like this. Looks like Pong F is making a move. Sub penny stock. It's actually Atari, and they're up 0.00075. We got zeros on zeros on zeros over here. Moving up, sub pennies, but movement's movement. So we got up 19 cents. Tootsie Roll's a weird stock because I've seen it jump up 30-40 bucks in one go. So pretty unusual stock, and then come crashing back down. Checkpoint. It's up 49 cents. So not a really big day for moving. Everything's kind of being down. But it's interesting to watch to see if it's going to. This is the push before the pull. So a lot of times in the market, the market makers like to. It's just like when they're playing a stock. If they want the market to go up, they push it down. And so it just depends on how much they have to push it down in order for it to go up the way they want it to. And so that's what we're seeing right now is the market's getting pushed down in hopes that it springs back up to life and starts moving because everyone's kind of like stagnant. Yesterday it didn't seem like there was a lot of volume, so it was pretty kind of a boring day. And I think the market makers were like waiting for the market to rebound pretty heavily. Nothing happened. So today, if the market didn't rebound yesterday like they thought it would with enough volume, then today what's going to happen is they push it down. And then once they've pushed it down enough, they let go. All that tension, that potential energy explodes upwards. And so that's, this is just them toying with your emotions. So we're just waiting for them to let go of the, shake up this bottle of soda and, pop the top off of it and watch it explode. So nothing really exciting going on right this second. This is probably where I start to cut out. I will probably take a break here since the market's kind of like at a pause, and I will probably start back up in a little bit to kind of recap on what's really going on. Oh, we got a viewer. Welcome. Let's open up a web browser and say hi. 2 viewers. Oh, maybe I'll stay on. Never mind. I don't know where this YouTube chat's going. Here it is. Maybe. Maybe not. YouTube is loading. You have to give it time. So if you got any stocks that you'd like me to check out for you, please put them in the comments. I'd be glad to check them out and chart them for you. I have no problems doing that. Market's kind of slow today, but it would be a good day to chart some things so that way you can actually see it progress. I am on TradingView, and on TradingView they have this thing where you can actually see the progress after a predicted chart. And so I can pull that up. Here, I'm going to put it in here. Give me one sec while I log in. I don't know why my internet's being slow. I mean, I do, because my internet's really slow. You would think that 18 megs per second is enough to just chat, but I guess not. Come on, let's go. All right, while we wait for that to load, let's see what else is moving here. ET is still stagnant. ENBL is still stagnant. HD is sitting at $1.93. Nothing really exciting going on. Everything else is down. Just all your big hitters are down. Shoot, Amazon's $60 in the hole. Tesla's down 25 bucks. Coin's down 15 bucks. CrowdStrike down $10.60. Facebook down $8.67. SPY down $4.24. Chewy's down $3.70. DKNG is down $3.34. That's a gambling company out in Vegas. It looks like it might actually start loading my YouTube here. I got 3 viewers. Wow. Okay. Welcome to the chat, or to the stream. If you guys got any tickers you want me to see, please let me know. Glad to pull them up for you. Waiting for my chat to load up here. It's taking forever. I don't know why. So if you've already written in there, I am sorry it's taking so long. I'm typing now. I put Tucker. Wow. So Apple's down right now. It's not really doing much. I think it's there's rumors about their electric vehicle coming out again. That kind of surfaced. And I showed a video earlier, but I mean it's nothing special. All right. Well, I guess I'll chart on my own then. I'm gonna put this here in case somebody responds. Then let's go ahead and take a look at let's take a look at SPY. Let me switch cameras again. Let's go here for the ES. Switch this to, you know what, let's leave it right here. get rid of all this mess. Alright.
You got me looking like a clown. I heard you left the city. You out there skipping towns when you should be here with me. The street lights don't shine.
Let's get my indicators up here so we can see what's repeating itself.
You had me think I let you down when I know that
Oops. Let me put those. Get rid of that. Do that. Get the upper. Now let's adjust this. That's that.
Like every single time I told you just how pretty you look when you were mine. Did you even believe me? And I don't know how to break through anymore.
I think I got an idea of how this works. I want to look at one more thing. Let's look at this. Actually, let's look at that. Get rid of this one. And then let's switch this to a 4-hour. Just deleting all these trim lines I don't need. Alright. How's this thing set up?
We are back, season 2. Let's go. This
Time
is why we
frame.
aim to legendary.
Do a day.
10 new
There we
houses,
go.
10 new leaders.
And the coin is real.
Judges roll call. Law. Jamila.
Leomi,
Megan Thee Stallion.
you did what needed to be done.
I want the world to see that y'all.
Alright, so what this does is it actually takes in, it marks the overall direction of a group of candles over a certain period of time. And so what I like to do is it gives me a visual representation of what's actually happening in the market. And so this is the ES, but so you have like a V shape right here, which is easy to see, but what's not easy to see is that you got a kind of like a V shape and then another up and like a reverse V shape here. And so like a V shape and then like a reverse V shape.
A disposable
here.
razor this epic only
And so
comes
like
around once
V
a century.
shape
Introducing
and then
Schick
reverse V
Original.
shape.
A dependable, tested,
So
tough
V-shape.
disposable razor that taps into
And then
100 years of
reverse.
Schick's
So this will be the
expertise.
reverse.
It's got 4 titanium
And
coated
then after the
blades,
reverse,
a lube strip, and an easy to grip handle for
that.
one heck of a good shave at an incredible price. Available in both 4 and 8 count packs. Get yours today, exclusively at your local Walmart.
That goes sideways and then it goes up, comes down again. So this one was reverse V shape, comes down again, then goes up, goes down again. So this is down, down. Down, 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 then up. My little girl's talking to me. I can't hear anything she's saying. I think she's just singing to herself. So down, down, sideways. So I think this, yeah, this is this here. So what we're gonna do is chart it here, to here, to there, to there, to there. So I did this. This would give you your absolute low of what should happen in the market. And then if I did that, so that was from the previous one, so it should be here. Yeah, that works. So then this should go here. And so that should be your path right there of where the potential is for this market. You see the ES is starting to turn green right here. It actually looks like a really good get in at. If you don't want to trust that right there, then I'd wait for the next candle to close above it. This is a 4-hour chart, so that might take a while for it to happen. You can switch to a lower time frame and see, you know, this go down to like a 15-minute. I don't like to go any lower than that. And then look for a confirmation of this actually turning around and going up. So what I'd like to see is you got this indecision here. I'd like to see this candle turn inside out and stop above this actual indecision candle. Or, you know, if this candle goes down, have another candle that is bullish engulfing and stops above this red candle here. So typically what we're saying, no matter what, is we want there. We want to get in when this crosses above that. So that's what we're looking on the ES. Now for, let's see, what else do we got here? Let's take a look at Tesla. Guess all my charts are gone. TSLA. Oh, let me switch back to a daily chart. I don't like to chart in anything but a daily. Anything less than that, then it's too much fluctuation. You're not really going to get the whole picture. So this is testing that downward support line that I already drew down here, and look how it's sucking back up and trying to get inside this support line. So I'm looking for this to actually start showing on a smaller time frame. Now let's go back to the 15, and we're looking for it to actually start showing green. Above where it's at right now. Let's see how this is a bullish engulfing candle right here. That would be pretty much what we're looking for, or for it to pass this last previous high right here, which is 684, but then that's $17 away. I'm not waiting for that long for it to get back in. So it just created a new lower low over the last couple of candles, but this is a pretty solid green candle right here. It's already past the point of where it was at the last low. I would say that if this closes above that area, that that'd be a pretty good signal to get in. We're looking, this is the node, the last previous node back here, that this one came back and retested and dipped down below. And so I would take from this node and draw a line across, and this is exactly across where the high is of that candle that we're at right now. And so you might see resistance as it's going into this candle right here, because it's probably, you know, someone's probably selling off in this area. But being that this is dipping into liquidity and trying to pick up and reaccumulate more shares, this should be a pretty strong run up from right here. And so all you're looking is for it to start accumulating the float and absorbing most of the float. Once it's absorbed all the float, which it looks like it's already, well, let me go over to Tesla on this one. Yeah, I mean, it looks like it's already hit absorption on Tesla. So you're going to see 3 bounces. They can be up, they can be down, they can be sideways. But you're going to see 3 bounces from here on in a 15-minute chart. So it'll just be 1, 2, 3, and it should just, and they could even be going up. And then it should just be a free ride from there. And so that's what you'll see once this candle is done, is it going into the test, basically a secondary test of this low, and then a secondary test of that. It's basically bouncing. What it's probably going to end up doing is probably bouncing out of the area of where it's at, going above it, coming down, finding support on this trend line, this green line, then bouncing up and going above where it stopped when it went up before, right before it tested this or retested this green line, find support on top of that and bounce out and go long. So that's what we're looking at for that as well. So it looks like a really good place to get in. You know, like I said, you see it's starting to see a wick there, where it's starting to sell off a little bit, because it's hitting that node, and that node is right there. So we're just waiting for the market to do something that we anticipated doing, right? So I wanted to break above this, come back down, find support on top of this node right here. So that'll be a spin down, a spin up, find support, and bounce out and go long. And so that's what we're looking for out of this right here. It's a spin down, spin up, find support, bounce out and go long. So it'll look kind of like this.
Change your background, but let's back down so you can see this is a problem. I don't want to put myself.
It might go as deep as that. This is what we want to see, and then we want to get in right there at 673.50. You see this movement come up and come back down, hit the 673.50 area, or even anywhere close to that area coming down like that, that'd be where you want to get in. You know, or if it just breaks, if it breaks this line at 672.24 and solidifies on the other side of it, that'd be a place to get in, because that means that it's broken past where this node is, and it's going to use it as support when it comes back down the next time. So if you want to get in a little bit earlier, that would be the place to jump in. So I'm going to show some of these different, for trading view, why I like it. It's because you can actually pull up a stock, and then you can hit, so there's a prediction here, you can hit play, and it'll show you what happened over the since the prediction made, what has happened to that stock. And so I have to run this back so you can see the chart. Oops. Hit play. Back. there. So it's bouncing off of this support line and basically solidifying on the support line and looking to go long from here. So if this holds, then it'd be a good place to get in. So basically you're just looking for this to start showing that it wants to go up before you get in. And so it's good that it came down and touched this because it's showing that it's respecting this trend line and that's doing what you want. And that's how my style works, is that I draw these trend lines not because it's like I'm Nostradamus and I know exactly what's going to happen, but if I can find a place that I think that the market's going to repeat itself and then it actually starts to respect that trend line where it's starting to repeat itself, then I'm going to pay attention to it more and want to play it because it's showing me that it's going to do what I expect it to do. And so that's one way that you can cut out all the BS of like the guesswork, or where you're psychologically or emotionally are making decisions that aren't really supporting what what the market is really doing. Take the guesswork out of it, draw the trend lines before it happens, watch the trend lines work for you. If the trend line is being used and being respected, then you have a good place to start off of and then work off from there. And so that's what I do. It's nothing crazy special or anything like that. There's a couple other things. I use divergence a lot to find my option plays on some certain stocks. Actually play better with divergence than others, and so those are some of the things that I look at to get in and out of my trades. RRR, I found divergence on this play, and if I draw this up, I got in right here on this red candle, saw this, looked at the charts and saw the divergence below, and on the MACD and stochastic RSI, and I have a video on that on my YouTube channel, so you can just go back and look for simple option play and you can see the divergence and how it works out for you. And so it's a very simple way of playing options, a very safe way, and it's very explosive if you find the right stocks. And I would kind of only put you on RRR and Home Depot starting out, and only play those until you find a win. So that way you get a good understanding of how it works, because those are going to be really strong divergence plays. As you see here, it created divergence here. I found it right here. I jumped in on before this candle was made, and the next day it jumps up like what, $3-4. So if you bought really close to the money, you're already in the money off of this one candle, and then you're making nothing but profit on the rest of it as it goes up. So that's kind of what you're looking at, or what you're looking for when you're starting out. And so if any of you have any questions about how to start out, or how to get into options and want to learn, I have videos that will show you everything from the beginning, and then I also have I can come up here and I can do another video and show you exactly what you need to learn. All I have to do is shoot a comment down below and asking how I get started. But again, I started off with a $500 account. You saw today it was up to about $770, $780. And I mean, it's been there once before, and I've reinvested. And whenever you get into an option plays, you have to wait for it to kind of come into go through the cycle to come into the gains. When you're playing with that little account, you really can't buy in the money on some of these stocks. You have to kind of buy them outside. So you have to wait, and so therefore the value of it drops, and then runs back up. So it's a waiting game when you're playing in the beginning like that. You're starting with a really low account. Now, if you have some money to play, you can cut down the wait time like dramatically. You could be in and out of a play in the same day, or even in the same week, pretty easily. And so that's where we're at with my option trading, and this is how I do my options. It's been working for me. I've basically doubled my account, and now I'm on my second set of option calls. And so after this, by May 21st, I'll be out of all of these, and I'll be on my third set. And so I'll be looking at on that set. So I'm just looking to grow this thing organically. You know, if you look at Tesla right now, I'll switch back to the other off my prediction. Like I said, it was sitting at the bottom of that trend and looking like it's about trying to find support and go up. Well, this is a 15-minute chart, and here's a big bullish candle that is engulfing this red candle here, and then you got another green candle. And so whenever you have a very big green candle, you can expect the next candle to come down and wick, but at least down to about halfway of this candle to cover up half of the exposed area of that solid green candle. And the reason why they do that is because of Fair Trading Rights or Act. They have to come in and wick an area. If they go and wick an area, if they go past a certain area and don't really give the people who are trying to short this a chance, you know, then they have to come back and wick this area, or cover up the full area of the bull or half of it, to show that they gave those people a chance to get into the market, which is dumb because once it goes up like this and it wicks back like this to pick up the people who are trying to short, they're just going to lose, which is stupid. So it's just a workaround for them to keep moving forward and make more money or free up more shares. Kind of a dumb rule. If I was in legislation, then I would bring this up, just because it's kind of dirty, but whatever. I know it's going to happen, doesn't really bother me, but it does hurt a lot of money, but it also does give institutional of the float, and so therefore the stock actually moves up a lot faster when that happens. So it's kind of a double-edged sword. So that's what Tesla's doing. Let's take a look at, let me get back into my trading view. This is energy transfer, and so here is their path, and so you can see them just hugging this path right here, going across, going into 880 mark, and I have it drawn here because I knew that they're going to have some resistance here, and so it was going to come back down and maybe test this area down here, which it looked like it did already right there. So this could be the day that it actually breaks out and it's going to make a run for the 958. So that's what we're anticipating out of them. So we're just kind of sitting back and letting them do their thing. On ET, now ET just bought out EMBL for $7 billion. EMBL is enabled, but their net value is set at $3 billion. So their stock is easily going to double over the next 2 months. So let's see, is this one ENBL? Let's take a look at this one. Now on TradingView, I'm saying I can't wait for it on TradingView. You can find all my stuff on there. And the reason why I'm showing you these charts is because, you know, people can tell you all kinds of stuff. Like you can go to these different videos of people actually telling you like, oh, you know, this is going to happen, this is going to happen. They're going to do trend analysis and show you what's going on in the market, blah, blah, blah. And then you look at it and you think it's a great idea, and then you go on with your life and you forgot exactly what they said, but you probably already got into a position. You might have lost money, you might have made money, but you forgot about what they said. You forgot about what they said, where it was actually going to go. Whereas on TradingView, it'll show you, like if somebody plots something, it'll show you exactly what happens with the stock since they plotted it. And so I plotted this way back here, and near the end of March, and this is where I got in at, on this long green candle wick going down into this area right here. And as it came back and turned around and turned green, I got in around the 640, 645 area. And so I've been riding it since then, and it's basically been hugging this trend line right here, come up and hit the top here. I knew it would back down for a correction, because it basically broke out of a high, or like a trend area, or I'm sorry, consolidation area, which is this little area right here where all the price action's bouncing between. And once you break out of an area and break the last previous high, which is this guy right here, which was at $7, you're going to come back down and find support for that area and then bounce out and go long. And so all these are rules that I've come up with. I've only been trading for 9 months now, and I have acquired savant syndrome. I had a really bad wreck. I had 11 staples in the back of my head, and I was instantly able to start painting portraits immediately, where I couldn't draw a face to save my life. Well, what does all that mean with trading? Well, my acquired savant syndrome isn't just with art. It's something visual where I'm able to see things and understand things on a level that other people can't see them. And that's how I understand how to paint, is I'm able to look at painting and how other people have painted and understand how they got there without having any prior knowledge of being able to do it, and then being able to replicate that. Hey Moon, good to see you. Thank you, I appreciate that. I need that. I can make you a let's see, add moderator. There you go, you're a moderator. Let's go. Love you. See things differently from other people, and that has been what got me into looking at the stock market, because as soon as I started looking at the charts, I immediately saw something that I related to distribution and accumulation, which is institutional buying. Basically, it was my first thought when I looked at it. I was like, this is institutional buying, and they're actually manipulating the stock here, and this is their path. And so I visually can see it, whereas other people don't. And then it wasn't until, so I didn't expose myself to anything else in the market as far as like any other teachings until later on. And about a month ago, 2 months ago, I started looking at iCantw, and 2 months ago, I started looking at iCantw, and I realized that that was the missing piece of like the puzzle of what was going on in the market, and that was a logical explanation of what that is. And so what iCantw says is basically a schematic of what the institutional buying is doing, and they follow this path. It's a process of psychological trading that gets retail, which is me and you, into a certain process, and it's basically getting everybody on the same side of the fence. But you're also shaking out all the weak hands in the process, and they're letting go of all those shares, which is flooding back into the float, but then immediately soaking them back up. And so whenever you see a big green, like you see all this red, like drop down here, I'm gonna hit play here so you can see this. Let me switch back to my other chart too. So on here, we see all this red coming down like this massive red candle. This is FOMO. This is fear of missing out. This is when retail sees that the market's dropping, but they've seen it too late. And by the time they jump in, it's really stopped already going down, and institutional was actually buying it back up at the same time that they're jumping in and going down. So you see the big red candle is FOMO, fear of missing out, retail jumping in, running the price down even faster and further to a cheaper area for institutional buying to soak it back up. And then you see this immediate response from institution buying it all the way back up. And so you've got all this shorting happening here, and then institutional buying and soaking it back up. Now they've got control of the float, and if you look down here, this green line right here at the bottom, that as it spikes up and hits the 100% area right here, that means that they hit 100% of the float, which they've hit accumulation basically. And when you hit accumulation, there's only, 100,000 shares or a couple 100,000 shares left out in the float, or 1 million shares or whatever, which sounds like a lot, but it's not, because when you look at this stock, I think there's over 1 billion shares available out there. And so when you got a couple 100 million shares left over, that's all that's left for the rest of the world. That's retail, and institutional buying owns 90% of the float. Then retail is going to be fighting for whatever's left in that float, and then that's what creates demand. So this is the supply zone down here. Demand is created down here after they soak it up, and then now retail is fighting for those shares. And so now you see this candle here growing right here, and when you start to see this white candle pulsing up and down, and you'll see it, that means that they're soaking the float back up, that means it's pumping. That's retail jumping in or selling or buying or whatever they think is going to happen, but institutional buying it back up. And so you'll see it kind of pulse here, up and down until it pops. And then once it pops, it'll turn dark green and it'll kind of rocket ship up. And so now, usually after it hits Q3 bounces, so you'll see this come down and bounce once, twice, 3 times, and then after that it takes off. And so that's what we're looking at right here, is for this to come down to whatever level it's coming down to. It can go down and bounce 3 times down, it can bounce 3 times sideways, it can bounce 3 times up. Either way it's bouncing, it's going to have a high, a low, a high, a low, a high, a low, and it's going to run up. So that's what we're waiting on there. And yeah, I agree. I definitely think everyone should be watching this stuff. So this is the stuff that I've been working on over the last 9 months, is coming up with a logical response to the visual thing that I saw on the market. And so this is a curve right here, and you know, it's basically how a curve works is taking it from a high, you know, and dropping it down to a new low to reaccumulate shares, and then bringing it back up to a new high to make profit, and then dumping them off and starting the process all over again. Now, if they have problems reaccumulating to go back up, because normally they would stop right here and go back up, but if you look at the volume right here, see how the volume spikes up and runs up like this? So it hits accumulation here. So I'm going to draw a timeline so you can see it. This long green candle right here is where they hit accumulation. And so then it should bounce 3 times and then start going up. So once, twice, 3 times, and then start going up. But the volume spikes up huge. And because the volume spikes up huge and the price isn't going up with it, they immediately start dumping their shares. So as the volume starts to spike up above this area right here, this is okay, this is acceptable. So now when it starts to go past this area, this high of this volume spike right here, you see this red line, which is the average. Once it goes past that and you see that the price isn't going up anymore, and you start to get wicks at the top of your green candle, you've got a failed accumulation, which means you haven't acquired enough of the float in order for the price to run up. And so it's like this. If you go to the grocery store and milk is running for $3.99, let's say it's $4, and you know, at $4 I'm going in there and I'm buying milk left and right. I'm giving some to Mrs. Johnson down the street. I'm giving some to Mr. Smith down the street. I'm buying milk for everybody. They call me the milkman because milk is cheap. And so now I go in the next day to buy some milk for everybody and myself, and it's all gone. Someone's bought up all the milk, and there's only you know, 20 gallons of milk left for the rest of the town to have, and thousands of people go into the grocery store every day, and there's probably 100 gallons of milk bought every day, and so there's only 20 left. Well, what do you think happens to the price of milk? I mean, they don't do this in the grocery store, but if they worked it like a market, they would. The price of the milk would go up. And so if there was a shortage across the country for milk because all the cows got sick and they couldn't sell the milk, well, the milk that was good, that's left over, goes up in value because there's a shortage, you know? And so it's the same idea. If someone came in and bought up all the milk and there's only 20 gallons left and there's normally 100 people trying to buy gallons of milk every day, well, the value would go up. And so what was $4 now goes up to $5. And then when that shrinks down 5 more, then it goes up to $6. And then when it gets down to the last 10, it's up to like $10. And when it gets down to the last 5, it's up to $15. And then it gets down to the last 1, and then it's probably $20, you know? And so that's demand. That is how you create demand, is by shrinking the supply to a point where it's offset by the amount of people that want to buy it. And now they're stacking orders of people who want to buy milk, and you only have 5 gallons left. And so when you get down to that last one, somebody dumps off some of those, as I say, somebody dumps off 10 more gallons. Demand's still up there. You know, there's still 80 people that want to buy milk, you know, and so there's orders sitting up there, and it's at like 15 bucks. Somebody just dropped, you know, 20 more back into the float. Well, they get up, you know, it goes up even more. And so this is called the free ride. This is what institutional buying is doing, is they're driving the price down to a cheap enough price by dumping off all their shares and getting retail FOMOing in, helping driving it down as well, because their fear of missing out on this price action going down, because they can make money as it rides down as well. Once it gets to a cheap enough price, they immediately turn around and start buying up the float, taking control of the float and soaking it back up. So therefore, as it gets to a point where retail is starting to fight and jump in to buy it because it's at a cheap enough price, the price is going to start moving up. And so now it's actually running up past the point of where it used to buy it anyway. So let's say they ran it down to like $3, and then retail starts trying to jump in, but institutionals bought it back up. So now they bought it back up to $4. It's retail's jumping in to buy it. They're buying it at $4 and $4.50 for, you know, the last remaining gallons of milk there. They get it up to like that 15 buck mark. Somebody dropped another 20 in there. Well, it just keeps going up. And it just keeps happening until retail stops buying it. Now, retail stops buying it. Let's say it's at $25 and retail stops buying it. And they're starting to pull back. And they're like, whoa, this is way too much. And them buying gallons of milk for 25 bucks. I don't even like milk. I'm lactose intolerant, you know? And they start pulling out. And they start selling all their shares because they get scared because they think that it's too high. And so now what happens, that means that they brought it up to this area up here. And then once institutional buying sees that happen, that pullback, that natural response from retail where they're like, whoa, and they start to see wicks at the top of the candles, that's when they start dumping off their shares in portions. And they basically, you still have, there's going to be idiots in retail, there's a large majority of them are still buying it going up because they think it's just going to go up forever. And so as they're buying in, retail is actually selling off. And you'll start to see it, it's like this area right here. Retail's buying in still, but they're institutional selling off, so it mutes it. It doesn't move, it just goes sideways. Retail's buying in, they sell off, and then, you know, retail buys in, they sell off. Retail buys in, they sell off big. They sell off big. And so once you start seeing it run back up like this is called the buyer's climax, which is what is over here. But you have 3 bounces before it drops again. And so then they get to this point right here, and retail buys in big, and then they just dump it. And they just dump all their shares in 3 chunks. 1, 2, 3. You know, and then they try to run it back up, and then it failed. And because they didn't have enough control of the float, they have to drop it to a lower price to get the liquidity. Liquidity is the area of the market where all the stop losses and all the shares are sitting, that if you drop it far enough will break those stop losses of those contracts and free up those shares so they can take more control of the stock and run it back up again. So there you go. So that is the curve right there, and then it runs back up. So right now what we're seeing is it it spirals down. I'm going to draw this. Not that one. So right here is where the node is. And you can tell because you've got this wick going up right here on this candle, and you have this push down and then a back up. And so it basically, let me draw this. You have price action funneling basically down. Why isn't this working? To where this wick is. And then you have price action moving at an angle away from that wick. And you have price action moving at an angle going up away from that wick. And so what you have is like this area that looks like this, like a bow tie. And where the 2 arrows point in at is where your node is. So right there. In between these 2 lines is where your node is. And so when you see price action spin downward and then come back up, and then spin upwards and then come back down, and then hit this area right here, in between the two highs and lows, it should find support right there and bounce up and go long. And so you should be seeing it go up from there doing this. And so it's kind of like an S. So if I can draw, if I can get rid of all this other stuff. So kind of looks like so you've got this S kind of shape there and there. And get rid of these other lines. Maybe. There. So you got the spiral down, spiral up, comes back, finds support, shoots out, and goes long. And so that's, we're just waiting for that to happen. It's probably most likely going to hit a low at 663.72 if it comes down even further. There is a wick there that stopped just short of that at 664.57. And that's Tesla. I like Tesla. I like watching Tesla. I love Elon Musk. He'll tweet about something like, you know, I'm going to my favorite moon here shortly, which means that his stock is about to jump up in price. And lo and behold, like in an hour or two or something, it'll pop up and go up. And he gets in trouble for that mess, for doing that. But he does it because he doesn't like the FCC. So that's the NBL. Let's take a look at RRR. RRR is my favorite divergence play. You can play RRR for 15 bucks per option call, which gives you the ability to play 100 option calls for next to nothing, and 15 bucks. And so if it moves up, when you look at your option call, right now it's worth 65 cents. I got it at 15 cents. Now it's worth 65 cents, which means that it's worth, I've got 2 of them, which means it's worth 130 bucks, where I spent 60 bucks on it, or 30 bucks, I'm sorry. I spent 30 bucks and now it's worth 130. So, super cheap option call. And you pick it up on divergence and look at it explodes upwards. If I go to a daily chart, this will actually look better, or I can just go to this other chart here. Let me switch you to my other one. So this, again, this is trading view, and if I pull up it's my ideas page. Boom. Moon, thank you so much for joining in. I really appreciate it. To have somebody to talk to. If you got any stocks that you want me to pull up and chart out for you, I'd love to do it, even though you don't play them, or maybe you do. I don't know. Or maybe you're starting to think about playing them. If you think of a stock that you want me to pull up and chart for you, I'd be glad to. I've got Lululemon that I look at, which is a really good running stock. Pretty solid run, and I look at that as well. But so if you look at this chart here, this is why I like trading views, because it shows you the path. So back here, let's see, there's a divergence play right here, and so April 20th is when I actually got in on the stock. I saw the divergence play. Now divergence play is it. Let me switch you back. I'm sorry. Boom. All right. Let me go to my daily chart. So I have to make these bigger so you can see them. And you don't need divergence on everything. You just need it on one of these 2 oscillators. And so what this is this is the MACD and this is stochastic RSI. And all these are they're just taking the averages of the volume, which is this bars down here, and the price action, and there's a formula put together that creates these red and green lines, and it shows them added together, and basically it represents them as one versus just the price action up here and the volume down there. It represents them as one. And so by looking at that, you can get an idea of what the volume and the price action is doing together. And a lot of times it'll match up the price action and the MACD or the stochastic RSI will look pretty much identical to each other. But if you look close enough, you can actually pick it up to where you can see divergence, which means that one is doing the opposite of what the other one's doing. And so when it's doing the opposite, there's a really big tail there. So when the price action and the stochastic RSI or the MACD are mimicking each other, basically they're both going upwards or they're both going downwards, that's normal. But when one of these down here is doing the opposite of what the price action is doing, and it might even just be a slight, it's enough to give you a reason to jump in. And so I'm going to show you what I mean. So actually, I'm going to draw timelines. When you're looking for a divergence, you're looking for a low and a high. Or in this case, you're looking for two lows. And so this right here, this candle here with the long wick coming down, if you look at the candles before it, they're all low. Yeah, I can look at stocks for video games, and yeah, I can look at any stock. Chart is the chart, and candlesticks are candlesticks, and they're all, doesn't matter what you play, options, futures, stocks, whatever, it all works out the same way on a chart. And so to give more space here, I'm going to show you how to look for divergence, and I'll look at it for video games here in a second. So when price action is moving up like this and you have a candle that sticks out further than the other previous candles, and I like to say at least like, I mean, it could just be one candle, it could just be one candle that sticks out further than the last previous candle. That would be a low. But if you're looking for like a more prominent low, then you want at least like 5 to 6 candles that it's lower than for it to be a more prominent low. And so it just gives more emphasis to that low when it's lower than the other lows. So like this is the low, and then you got like 10 candles, and then this is a low. And so those are two lows that I'm looking at right there. And so that would be, if I drew a line connecting those lows, it would look like that. And so it's pointing up. And so now when I look at this set of lows here, if I connect the body of this lows down to this low here, it kind of makes an angle going down slightly. Just a slight low. And so if I drew a straight line, you can see that it's at an angle going down. This line is going down and this one's straight. And so that's, you're trying to look for price action saying that price action is going down in a slope. And then when I come over here, down here to my oscillator, so I want to draw a timeline from where my low is, which is right here, and then where this one touches here. Alright, and so that draws a line straight down through my oscillator, so that way I can see where the low is of these two lines. And usually it's going to be the green line that's the lowest one. It doesn't really matter which one you connect to. It could be a green and a red one, or a red and a green one, or it could be two green touches or whatever. But you're just looking for the low of the exact same area. And so if I was to draw a line connecting this low, that's going up. And I'm drawing a line connecting this low here, that is also going up. And so that is divergence. My oscillators are showing that price action is actually going up, even though it's showing me that it's going down up here. I can look to see if Epic Games has a stock price. Yes, I don't think that they do, but I can find something like that. So now once you found divergence where the oscillator is showing that price action is actually going up and the price action is actually showing that it's going down, there's up. Once you find that, you immediately jump in on an option call going up, because that means that you're getting an early tell that price action is, that this is actually going to go up. And so when you look at this chart, you see that it jumped up immediately. So now I'm going to switch it back to this one here. So now that I found divergence, you can see I got in at, on this red candle right here that wicked down and created the divergence. I get in right here on the stock at like 33 even basically. And then the next day it jumps up to 34.50. I mean, so if you're doing an option call, it immediately puts you in the money, which means that you're already broke even and you're not losing money on that stock anymore. And now over the next week,
Yes, you are.
so the next 4 days, you see it jump up another $3.
We serve all
And so
branches of
then
the military,
that for every
veterans, and their
dollar on an
families.
option call, you're making anywhere from $37 per dollar to 50 to 60 to 70 to $1.20 to $1.50. Every
Find out
dollar
if you're
it
eligible at
adds a
NavyFederal.org.
certain
Navy
chunk of
Federal
money
Credit Union.
to
Our
the
members
option
on a
call
mission.
per
Insured by
dollar.
NCUA.
And so you're incrementally making more money. It's compounding. And so if RRR was to continue getting up past the $38 mark and go up to the 40, I would be making a lot of money. And so that's what we're waiting for on RRR. And so if I hit play here, and RRR is Red Rock Resorts in Vegas, which is my favorite casino. And I just happened to notice that they run like Home Depot, and Home Depot runs like this. It's very bullish. And so it started off the day drawing back. It went up to like the $38 mark right here, and it drew all the way back down to here, and now it's sucking back up into this area where it started off at the day before, or stopped at the day before, which is it's a very good sign. And so this should actually be making a run for a new high here very shortly, if not by the end of the day. And so now that you understand what divergence is, which is one way I get in, and the other way is by plotting these paths and waiting for it to hit this trend line like it just did on this RR right here, and then looking for a positive reaction of it moving away from it, showing that it's trying to rebound off of that support line and going up. And so that would be another reason why I would get in is right here, is it's showing that it's respecting this trend line that I drew. And this trend line is just something that I saw in the past that I carried forward and put it up here to see if it would hold. And so if you look at it, it's actually holding it. It hit this trend line right here, it bounced off of it. Yeah, it went past it, but it hit it and started sucking back into this trend line, and then bounced off of it, hit it at the bottom, and then started sucking back up above it. So, and all this is just a trend from the past of a previous move that I correlated to be the exact same move as this one. And that's all I do. It's nothing, it's not, I'm not Nostradamus. I don't know what's going to happen in the future, but I can see where the price action is repeating itself. Move that trend line forward and put it in the exact spot that I think that it's replicating it in, and then watch it respect it. And when it does something that I think it's supposed to do based off that trend line, I'll jump in on it, and I can expect it to move up to repeat the rest of that trend. And so that's what that is if it's going to repeat the rest of this trend, it's going to keep going up. It's going to hit $46 here shortly. And I'm at, we got in at 34. So that's a $16 run. Whether or not it does it in the time that I have it in doesn't matter. As long as it makes it above 38, I'm in the money and I'm making money. I mean, if it hits over 40, I'm really making money. So anyways, enough about that. Let's see if we can find Moon a stock that is respectable for her in the game world. So let's see. I don't think it is public yet. So I'm gonna type Epic here. Let's see. GameStop, Moon. GameStop is public. They just went public. That's like the last biggest gaming company that's done anything that's actually, they're worthless. As a company, it's GameStop. I don't know if you've ever been on one. It's not inspiring. But market makers try to ruin their running. They're a SPAC, which means a new company entering into the market, and institutional buying try to short sell or short squeeze GameStop and ruin their open and devalue them by running them into the ground. And what happened was retail, for the first time, it became a meme stock, and that's how you heard about it. It became a meme stock because GameStop started building up so much momentum because retail wasn't going to have it, and usually retail's got weak hands usually, and so retail usually just gives up and lets them win, and so then everyone loses money. But this time, everyone jumped in and started supporting GameStop and said that they weren't going to have it, and they wouldn't let it short. So then you had millions, hundreds of millions of retail buyers supporting GameStop, which is worthless. I mean, GameStop doesn't offer anything to society. Yeah. Yeah, I'm invested in. I do option calls on everything that I've talked about today. I do option calls on. Tesla, I haven't really touched. It's too expensive for me, but that is something that I want to get into. I would even do an option call on GameStop if it respects my trend line that I draw. But it's a good company to play on because it moves pretty hard. So as far as meme stocks go, let's see. Let's do this. There it is. This is GameStop. I said it was going to come down to that 140 to 186 range when it was, up here at like 223, and now it's down at the 156 mark. So kind of hit right into that mark. Yeah, Tesla's great. Amazon. The goal is to get up to where I can play actual solid stocks. I mean, RR is as solid as it gets for a cheap stock. But there are stocks that move, like Home Depot is a tried and true. Home Depot moves like $4 a day, bar none. If it has a day that it's down, guaranteed the next day or the day after that, it's going to move up twice as much as it went down. And so Home Depot is like a thoroughbred. Like it's the Clydesdale of option plays. So finding divergence on Home Depot is like a massive play. Like I can show you a play on Home Depot that just happened like 2 weeks ago that had you been in it, and it's expensive to get in. It's like close to, it could be anywhere from like 800, like $400 bucks to get in. But if you got in 2 weeks ago on a Home Depot, you would have been able to run it up for $5,500 to or more per option call. It ran up pretty hardcore. I can't remember. I'm shorting that in. No, it was more than that. It was like, it was something ridiculous. I can't remember. But if you had 10 option calls on it, you would have made $50,000 basically. And so if you had $4,000 sitting around and you could put the game into Home Depot during this time, you would have made 50 grand off of it. Sounds like a lot of money, but it's not. $4,000, throw it to the stock. It's a normal day for most people who playing option calls. And so that's the point, is to get to that point where I can play something like that. Or play Tesla and run up huge, or and because Tesla runs $16, $30, $40 in a day. And I've got Tesla priced out right now. It's sitting at a low. I've got Tesla priced out to hit above 900, close to $1,000 before the end of the year. So it's sitting at 670 something right now. It's supposed to move up $330 before the end of the year, probably in the next couple months, to be honest. Are you interested in looking at GameStop, or do you want me to pull up another one? Activision, which is Blizzard, I'm sure they've made some games that you played before in the past, but they make mostly PC games. I don't know if they make any Xbox games, but Activision is a good one to look at. Oh, get this, my Xbox died 2 days ago. Yeah. I can't really expect much out of it. I think the hard drive got fried. Yeah, I know the hard drive got fried because I tried reformatting it. I took it apart and tried fixing it, and I have another hard drive to put in it, but I can't get it past the point of it like erroring out. It won't update. And if I could get one to update, then it'd be good, but I can't get one to update. So there's that. So I've been playing some online games and just little things to hold me over until I figure out what I want to do, because pricing on Xboxes are stupid right now. What? How is your Xbox Series die? It's an S. It's solid. It was like new. Did you drop it? I bet you dropped it a couple times. Did you throw it downstairs? They're not made to roll downstairs. It's not good. So, let's take a look at Activision.